Welcome back to the Building Wealth podcast. This is Market Commentary, and today we're focusing on a geopolitical development that's rippling through global markets: the rising tensions between Israel and Iran. What began as a long standing regional rivalry has now escalated into a series of direct confrontations. The recent exchange of missile and drone attacks between the two nations has reignited volatility across energy markets, disrupted shipping routes, and injected renewed caution into investor sentiment worldwide. Let's start with the Strait of Hormuz. Roughly 20% of the world's oil supply moves through this vital channel. Even the threat of disruption is enough to unsettle markets. Over the past 2 weeks, oil prices have swung sharply as traders try to price in risk, uncertainty, and the potential for escalation. One geopolitical misstep, and we could be looking at a full scale supply shock. That kind of shock doesn't stay contained. It spreads quickly, especially to inflation. Energy costs feed into everything from shipping and manufacturing to food production and utilities. When oil becomes unpredictable, central banks grow more cautious. Inflation expectations tick up, rate cuts get delayed, and global bond markets respond. We're already seeing signs of this. Government bond yields in energy importing nations are rising, black gold is climbing as investors seek safe havens, and equity markets, particularly in emerging economies, are showing signs of capital flight. In some cases, investors are exiting riskier assets in favor of more stable, developed market securities. On the shipping front, insurance costs have surged for vessels transiting the Gulf. That means higher transport costs, tighter margins for exporters, and elevated prices for importers, especially those reliant on oil, gas, or grain. This adds another layer of pressure to a global supply chain still stabilizing from recent years of disruption. Yet where there's risk, there's also opportunity. Energy stocks, defense contractors, and certain commodities are all drawing renewed attention. For investors who can navigate the volatility, there are windows to capitalize on reallocated budgets, emergency spending, and price fluctuations. There's also a diplomatic angle to watch. Countries with relationships across both sides, like Russia, China, and some Gulf states, are signaling a willingness to mediate. Any movement in that direction could ease market fears, though at the moment, the tone remains cautious. So, what does this mean for investors? It means geopolitics and finance are more intertwined than ever. In today's markets, watching macroeconomic data alone isn't enough. You have to pay attention to the political landscape, military movements, and energy flows. Risk and reward now shift with headlines, not just balance sheets. For long term investors, it's a moment to reevaluate exposure to energy dependent sectors and economies. For more active participants, a high stakes environment where timing and strategy matter more than ever. In both cases, information is your greatest asset. Thanks for tuning in to the Building Wealth podcast. Stay balanced, stay globally aware, and we'll be back soon with more analysis to help you navigate a complex, connected financial world.